the end of that music means it is a Friday edition of the Tackle Trading Halftime Report. This is Coach Frank, as always, with my main man, Coach Matt, as we work through the market on a Friday, a Frank's Charts day. Welcome out, Team Tackle. Hope everybody's had a great week, both in and out of the market. If you are new here, welcome, welcome. Great to have you on board. It always is helpful to give that old like and share and subscribe for YouTube things. You know that drill. Always a fun game to play with the YouTube overlords, but hopefully it helps you navigate as well, so you're alerted anytime we are going live. Coach Matt is on the road today, but as a trooper, he's not going to miss the halftime report. I said, Matt, you want to take this day off? And he said, are you kidding me, Frank? It's Friday. We got some charts to look at. How you doing, brother?
Friday. It's labor market. It's Apple's earnings report. What are we talking about? I drove 12 hours to get into the report today.
I know you did. We appreciate
coming from
you.
The bunker in Utah, by the way.
So exactly, the bunker. No cam is probably for the best. Well, yeah. Utah welcomes you. It's great to have you on the show here, Maddie. We missed you yesterday. Glad you made it down there safe. Labor numbers coming in, like you said, it's one of those bad news, good news type of situations. What a tremendous week in the market to the upside. That's got the good old V-shape, Maddie. I mean, just got going early and momentum just kept picking up and up and up and up. We're almost challenging that resistance level from last month as we kind of are battling the 50-period moving average here today. What do you think about this market? Been a good week for the bulls. I do know that much.
Oh yeah, it certainly has been a really good week for the bulls, but the bulls got what they wanted. They heard what they wanted from the Fed on Wednesday. It's been a pretty decent. I feel like I was on an island last week talking about the good nature of earnings season as the market's melting down, and I'm like, yeah, I know the market's melting down, but it's not on earnings. The earnings been good, and so market obviously heard what they wanted to hear from Powell on Wednesday. I wasn't in the report yesterday. I'll save my detailed thoughts for the Trading Justice podcast this week. But from what I heard, I heard a head of a central bank that was not looking to raise rates in the future. I can tell you that. Mm-hmm. I heard a central bank that was painting a picture of a prolonged pause going into a cut mid next year. I heard basically the Fed say we're done. And I think that's exactly what the market heard this week as well, that we don't have to. And it's not just the Fed's done and all of a sudden it cures all the market evils, right? That's not what it is. But it reduces the variables of concern. And when you're talking about those, the uncertainty that has persisted in this marketplace, if you can remove a few of those uncertainties, it goes a long way for the bulls, quite frankly, that they can get back into looking at a earnings environment that has been better than expected. And then you get on Thursday, you got Apple's report on Thursday. Apple came in. I kind of see Apple, and we'll talk about this in a second, very similar to Google, a decent report, just reported on a better date, Frankie, than Google did, I would say, in a slightly better environment, I would say today as well. And then today, the way I described it earlier this week was you have the number one central bank with the number one economic report and the number one company reporting this week. We're going to have a very good understanding of where this market wants to go as we get more data this week. And as that data came in this week, we got the Fed giving us what they gave us on Wednesday with the potential of a legitimate pausing cycle and probably going into pivot conversation. Think 6 months ago when we're all debating pausing and how long the pausing is going to happen. And the Fed's not on that part of the conversation because the Fed's never going to be on that part of the conversation when we market participants are on that part of the conversation. 6 months later, we're talking about, all right, prolonged pauses going into pivot analysis, whereas the Fed right now is still on the hey, we may just in case, but we recognize the weakness of the economy, and they're kind of doing that song and dance right now. So markets called the Fed's bluff for the better part of the last few months, and it certainly looks to be the right side of that analysis as of this week. And so you got the Fed potentially pivoting on Wednesday. You get Apple reporting last night that was pretty decent, but you've had a decent earnings environment in general. And then today, after the Fed pivots, talking about how If the economy comes down a little bit, we're not raising rates at all. And if the economy comes down even more than anticipated, we may cut sooner than anticipated. Well, you got that news here today, there, Frankie. You got labor market numbers, and across the board, you had reprieves. I wouldn't say anything outlandishly negative either. I would just say you had a reprieve from the impact the labor market has put onto the market and thus on inflation and thus onto the market. Average hourly earnings contracted. It didn't contract under zero, but contracted against the expectation. It's been 0.3, what I felt like all year long, 0.3, 0.4 on average hourly earnings. It comes in at 0.2. The labor market numbers expected were supposed to come in at 178. That was a big reprieve from last month. It came in at 150. Unemployment rate goes up to 3.9. ISM services, not part of the labor market numbers, but that contracts a little bit from last month's 53 reading to 51.8. And so you just got that good old fashioned bad news, negative economic news equals good news to the market that has been laser focused on if the Fed is going to be done raising rates, that have been laser focused on the higher for longer language. And now you kind of reduce the importance of the higher for longer language. You reduce the importance of the central bank. It doesn't remove those variables from the equation, but it reduces their importance to a certain extent. And if that occurs, it's 1 week late, but it's kind of what I felt would actually happen this earnings season, that as we go through earnings season, the less macro we talk about, the more we focus on the actual earnings landscape, and that's going to be a positive thing for the market. It's a week late, 4,200. Come on, market. You couldn't have done this at 4,200. Come on, really? But outside of that slight complaint, it's honestly playing out a little bit as expected. And if you're taking the breakout of 4,200 as a little bit of a fake down on that weekly chart, it's not too surprising to see 4,200 kind of hold. It's not too surprising to see the bulls come back up. And now the ultimate question, Frankie, is obviously we're going to be upgrading sectors here. Obviously, we're going to be upgrading the market here. It's just going to be a debate on how far do we go, because you're not in a bullish uptrend, so you can't put it into the bullish pattern yet. But what you can put it into, especially if you kind of discount a little bit of the 4,200 zone, you can put this into that upper echelon of reversal analysis. And especially when you're looking now at this little pivot you mentioned, you couple that, you come out to the weekly chart, that little pivot point is right where the 20 period moving average is as well, Frankie. You kind of line that up in a breakout zone. You line that up in a retracement next week, a little bit of a cup and handle type retracement next week. That looks really, really, really decent. There's a couple patterns that could develop here over the next couple weeks that could be extremely compelling in my estimation.
Yeah, absolutely. A little bit of, I mean, obviously we're running really hot into that resistance level. So, you know us, we're going to want you to simmer down and develop some sort of a high base / flag. But it's really intriguing, Matt, because we get through that, whatever it actually looks like when you break through that. You've got through the 20 weekly, you've got through the pivot, you've got through the 50-day moving average. That's a lot to get through, right? That takes some momentum. And I'm here for it. I'm excited to see how this develops as we go into into next week. Whenever you see, it's very much been kind of the all or nothing market. I think for the most part this week, where pretty much
I love Mark's categorization, the Mountain Dew market, right? Now we're just dealing with it on the bull side.
So and I'll always call it all or nothing, because I was calling it all or nothing long before Mark was calling it Mountain Dew. So that vernacular stuck with me for better or worse. I like Mountain Dew market. It's just old habits, right? They die hard. The week, so I'm always interested in how things develop when we kind of start coming out of that, right? What kind of things, because things will start to stand out, right? Certain sectors, certain industries, certain stocks are going to start standing out more than others. Pick a random chart. Odds are it looks somewhat similar for this week to the price action that we saw in the market. So I'm excited about it. I'm also excited.
We're going to have some really good haves and have-nots conversations on this type of price movement here, because what you have, Frankie, and you can't really see it on the chart yet, but one pattern I did talk about here was an inverted cup and handle formation. And you have the you're about 70% into the inverted cup and handle conversation when you're talking about the development of that technical pattern. And that's why, like, I see the V-shaped recovery here. I think everybody sees the V-shaped recovery here, but I also kind of feel resistance is going to play a role here. And you could see a lot of scenarios where basically this week wiped out last week, and it wiped out a lot of this downward pressure on price. And the bulls celebrate this, but they celebrate it by locking in a little bit of profit and going out to dinner.
Yeah,
You know
a
what
week off,
you know
right?
what I'm talking about.
Yep.
And if that occurs, and I don't have my epic pen, so I feel a little lost drawing it. But if that occurs and you get a little bit of a pullback down into 4,300 zone, that would be a left shoulder head, right shoulder conversation going into a really clean neckline at the 20
Yeah,
weekly.
it
So
would.
there, or you could high base here, and that could be a really, really compelling pattern as well. Regardless of the situation, low prices are firing off. High prices are recovering off their drop in price. Think Google, for example. It's the week of the bull, and they got the data they were looking at. They got the conversation they were looking at. Now they can focus on earnings. And earnings, quite frankly, this is like the 15th time I've said it in the last week and a half, but I've had to say it in the face of a bloodbath. Now I can say it in the face of the bulls coming back and partying a little bit. Earnings has simply been better than other people expected out there this quarter. They simply have. Blended growth has improved dramatically, especially when you discount certain areas of the market, which we typically don't do on macro analysis, but it gives you a little bit of context to the improving conversation. And so I'm looking forward to the patterns that develop. And I do not hate the V-shaped recovery here, Frankie.
No, I don't either.
Especially if you're looking at this being a little bit of a fake down. Now you just see it basically recovering back up into the price. And if you would have held 42, you don't see that as necessarily overextended. So I think there could be some very compelling patterns to develop here.
There absolutely can be, and I am definitely here for it. Yeah, and when you think about V shapes, Maddie, I'll never catch the SPY chart, the S&P chart. I never catch it that way. But there's always, I'm going to talk about that this week in the stock report. There's ways that I can take advantage of it through things that look good on their own, right? I'm not going to sit here and act like I didn't get to piggyback on, Macy's, for example, from this stock report this week, or Fast. Sure, we got to piggyback a little bit on that bullish momentum, but those were standalone good situations to be in, right? And that's what I love about being a stock picker.
Well, can I just say one thing on that, because that's absolutely 100% accurate, and I wouldn't say that's 101 analysis, but I would say that's technical analysis 201. When you're talking about a marketplace that's overextended, what technical patterns are in a pristine environment with the market overextended? And the two technical patterns that you really look at when the market's overextended are typically not bearish. They're actually individual stock bullish retracements or individual stock bullish breakouts.
Yep.
And the worst time to look at, say, for example, a bearish retracement is when the market is overextended, because a bearish retracement is going to form a deeper bearish retracement if the market's overextended. And so you're absolutely right there, Frankie. And so it's a really good recovery. It's good to see from the market bulls. And it's not, to me, it's not on the backs. And I know we're Mountain Dew market, or everything or nothing type markets, but there was legitimate news catalyst.
Yeah, this week there was, yes.
There was legitimate catalyst out of the central bank this week. There's a legitimate catalyst out of the labor market numbers today. And there have been legitimate catalysts from an earnings perspective as well. And so it's not coming out of nowhere, quite frankly. And I feel like the Bears got that gift where the market was just technically challenged last week. I think the market is showing a little bit more of its true colors, more neutrality, fighting into bullish reversal analysis. That fits my mindset a little bit more. And again, I don't think we can talk about seasonality here, because this is a Fed pivot conversation as much as anything. But fourth quarter rally's back on.
Yeah, it's back on. Gino and I were joking, I think, in the coaches show, like, if you took away those last three candles, for the last three red candles, it kind of played out, right?
It's all good. 4,200 holds.
So,
it's all good.
So almost looked right. We know it's going to help that cause, Maddie, is the dollar. Seeing quite
yields
a bit. Yields, the dollar, seeing quite a bit of pressure. We've harped on it. I think the whole team knows that it's just beneficial for these stocks to go up if this the yields, if the dollar stop going up, right, they put a
Man, this
tremendous amount
dollar
of pressure.
tested me the last few days.
It's been well, it's not been boring the
No,
last couple weeks
the
really.
fake out, and I basically said, listen, on the breakout, you got to be asking for a fake out here if you're a bull. You got to be asking for it, and we got it, but we got it on the backs of a pivot out of the central bank, and pivot in language, not a pivot
Yes,
in
but yeah.
actual monetary policy. So excuse me for that pivot language, because that can mean a vastly different thing versus what I was talking about.
Listen, there's one thing I know. You're a fan of the word pivot for a lot of reasons. Even his fantasy football team is called Pals Pivots.
It is called
So
Pals Pivots because he pivots all the time. Like he pivots with the Emory County wind. He pivots there, Frankie.
love it.
But in terms of UUP here, best case scenario for the Bulls was a violation of bullish pattern analysis. And Frankie, up until today, it was all bullish pattern analysis.
Yeah, you
Cup
had
and
broke
handle,
support
ascending
and
triangle, high base, all of them failed. All of them broke down. The dollar had an opportunity to break and run. It didn't. It violated, and it violated based on analysis, and analysis coming out of the United States and not outside of international, because what's been driving the dollar primarily is international, not necessarily the US, outside of the improving economic conversation. But again, it rinse and repeat the conversation with the S&P. S&P's up, dollar's down. It's based on the exact same analysis. What's really, really telling is TNX. And I said this last week. I said it the week before when people were saying yields were going up. No, they weren't. They were not going up. They were shifting volatility. And that shifting volatility, the top end of the chart once again plays out. Downward pressure in price here. Again, it's not that yields are not going to be part of the conversation of the future. It's just not necessarily part of the conversation today.
no, and into a pretty important support level, and that is the first time on TNX that you've seen the crossover to the downside on the 920 combination in a hot minute. So definitely giving some reprieve to the bulls out there as well. So really good situation for some pattern develop. Speaking of pattern development, Maddie, I think you're probably happy with the way that your gold is developing here over the past couple
so much
of
about this
weeks.
chart.
The 9 holds, but it doesn't immediately break through that resistance, right? So it gives it a little bit more time, at least another day of consolidation at that very important resistance level. I would assume that anybody who is super interested bought off the 9, and anybody who wasn't, they're waiting kind of like you for that consolidation to finish up, break through that resistance, give us that close, and let's go. You've got a lot, right? A couple of weeks ago when you and I were having this conversation, maybe it was even just a week ago, we were, you may not get it, never hurts to ask, but here we are a full week into it, another week of consolidation. That really doesn't seem like a lot, but that helps so much.
There's
right?
not a chance in the world you're going to describe how impressive this is. And I'll just say that as kind of lay it there.
Yeah, I think that's fair. Art can say more than I can,
gold
right?
lost the safety bid and didn't violate support. The market scream up this week. The bulls are partying like it's 99, and gold didn't break the 9 EMA. That is extremely telling. That is extremely telling. When gold, there's 2 reasons gold goes up. One is the safety bid, and that's when gold skyrockets, is when it gets the safety bid. Why do you think gold was recovering so much off its downward pressure in price? It was getting a massive safety bid as the market was going down, 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 down. Market recovers here. I can't tell you how many times I've seen a V-shaped recovery in gold get blasted simply because the market recovers here.
Yeah,
market recovers here this week, and gold doesn't break despite losing the safety bid. It's the second reason: pauses. Pauses can be extremely compelling to gold analysis. And so you have the second one playing out a little bit more than the first one here, meaning the pauses on the monetary conversation. And so I'm just really, really impressed here, Frankie, more than anything, that you haven't really gave up your technical edge.
Yeah.
And quite frankly, you give another 2-3 weeks of consolidation here, that's what I would love. I would love some consolidation here, especially when I see it as a trading environment above any resistance level. Still, we're
Sure.
still talking about holding the 90 EMA. That's a momentum type analysis. I would like to see that change into stabilization more than anything. I'd like to see a carry a bid and hold a bid when we're talking about technically increasing percentages of portfolios. Does that make sense?
Yep, absolutely. Absolutely. Boy, I could sign up for at least another week. And hey, you know what? There's an old saying, Matt. Doesn't hurt to ask. Look what you got. Where 1 week into that consolidation period, let's get another. Let's let that 9 weekly catch up, right? Like I said, give us 2 weeks, and that thing probably has, and you've got a pretty compelling multiple time frame situation, in my opinion,
100%.
at least. So
100%.
excited about that. Crude, not much.
Well, and real quick, Frankie, like you got wick noise all the way up to like 2080
Yes.
here. A lot of wick noise, right? But I do think this level on the
I would agree.
weekly here, coinciding with this wick here, I think that's the resistance over
It's showing
track.
us, yes, it's
Is
showing us
2020.
right where that is. I would
Yeah.
100% agree with that
You
analysis.
clean up 2020 on a really good consolidation break, we're going to not care about the wicks.
Absolutely not. Absolutely not. It's because it's telling us, right? It's developing that price action there, so we're not having to guess. So
yes,
unlike
100%.
certain other things that sometimes don't do that, we'll keep it up.
We like it when the price tells us what to do.
Yeah,
we do like that.
It's very helpful, right? Well, the only thing that the price has told me on crude to do lately, Maddie, is leave it alone. You got bearish situation with the falling 9 below the falling 20, but you got all sorts of support levels. Just continues to get slapped down at that 9 all week long. Anytime it tried, it was not able to succeed. Just have this big chunk of support. I don't know. I kind of have it between 78-ish and 80, Maddie. There's just such a big zone in there.
There's a lot of junk underneath 80.
Super challenging to want to trade it to the downside. I mean, obviously hindsight being 2020, I wish I would have over the past 2 weeks, but just so much.
That came out of nowhere though. That's
it's
so hard. Like when you look at something historically, like, oh yeah, good. Yeah, but 2 weeks ago we're talking about a high base, and both you and I are like, yeah, I'm actually impressed. It actually gave enough time to give a high base, but we still don't like it as a trade because of all of the news, right? Yeah. So it's a tough instrument right now. It is. It's a very challenged instrument.
Yeah, it is. It's just got too much junk. I mean, you've obviously caught the 9, which is a positive from a trading perspective, just to the downside. It's just too much junk, too many support levels that my eyes can't not see, right? Like, you got to respect this. Well, if this breaks, oh look, there's $1.37 that you could maybe go get to the next level.
But the problem is it's not going to be a technical conversation.
It really isn't.
This is not a technical conversation. If it was, we could break it down a little bit more clearer. But this is a headline conversation. And if you've been tracking the Israeli-Hamas conflict, that conflict is expanding. And you're probably looking at crude saying, why isn't crude held up a little bit more? Because ultimately it hasn't expanded to Iran, but it is expanding. And so it's still there's still massive variables here, Frankie.
Yes, things that can, yes. And I would just prefer to leave them be.
I'd prefer to talk equity and prefer to talk gold and prefer to talk even Bitcoin over crude right now.
So yeah, you mentioned church, and
I did.
Feels like it's back to its old shenanigans. I got to the breakout of a really clean high base and then a super quick snapback, right? So back to its old shenanigans, a little bit of wiki nonsense. But I mean, obviously you have to be a little bit concerned about that in the very short term as as fake out on that high base. But we've not broke support or the 9 EMA.
It's still impressive
yet, and so I think it's still, you're still fighting the good fight. It just, man, Bitcoin is just hard for me to play. As I've kind of said before, I'm kind of waiting for
that down to close above 18. That's what I'm waiting on.
18 and fix risk, because I'm not going to deal with those. I'm not going to let those wicks annoy a trade. It's just a trade. It's not like I'm
buying
taking
a 6-month option, Frankie, and I'm just parking. I'm not going to look at it.
yeah, I mean,
Fixed risk.
it's just a trade. It's not a,
Yep.
position or anything. So I would agree, but good little bounce back here today. I do think that kind of, fake out of the high base does muddle up the Bitcoin chart a little bit. I mean, it's one of those charts, if I were in that, I'm not stopped out yet, but I'm complaining because I got faked out a little bit, and now I'm kind of just playing the patience game.
You're complaining a little bit if you got triggered in 2 days
I'm
ago.
complaining. Yeah, I'm
Because that was
complaining.
pure. That
And
was
I
absolutely
can't
pure.
fault anybody for I can't fault anybody for that entry.
I don't fault anybody on that entry, and I don't fault anybody on complaining, and I wouldn't fault anybody on saying, yeah, this reminds me of Bitcoin to Volt. I still listen, I'm not going to complain at it. It's held up really, really well.
It's been impressive.
After that parabolic move like that, you haven't even touched the 9 EMA yet. That's impressive, number one. BITO still looks really, really good above 18. And I think for you and I, at least, because we don't really trade Bitcoin futures, but for you and I think would be quite interested in a BITO above 18. And I still think that analysis is really, really simple.
Yeah, I do too. I think maybe that's why I like it. It can finally get involved and not have to use my brain too much.
Yes. Yeah.
So,
if 1000% agree with that.
I'm all right for it. Well, that is the skyline. Before we jump into earnings, Maddie, just want to remind the team that that maybe didn't have a chance. Coach Tyler did an awesome webinar Wednesday. I know a lot of the team were able to catch it, but if you weren't able to, he did a great little webinar, part 1 of his series on bonds. Really informative. Coach Tyler's so good at breaking things down, especially the financially jargon stuff, Maddie, that is, can be a little bit confusing.
He makes it entertaining and easy to digest.
Yeah, he makes it really easy to understand, very entertaining. You'll find the link to that in the step channel. I put it in the step channel. I also put it in the general channel over on Discord.
Yeah, and I'll find your message and I'll make sure it's pinned in general so that anybody that wants to watch the replay of the bond conversation with Coach Tyler, they can get it in the general channel in Discord. So that definitely just check the pin there. I'll just say this: I attended the webinar and thoroughly enjoyed Tyler teaching. But I'll tell you, Coach Tyler is one of the finest educators in the financial markets in the history of the financial markets. He is a gem to our community. He is amazing as an educator. He has such a passion for educating. And I thought he did a wonderful job teaching the basics of the bond market, which can be a little bit complicated to understand if you're newer to the area of this marketplace. So definitely check that out with Coach Tyler. And Coach Tyler is going to do an advanced conversation next Wednesday. So part 1 was this Wednesday for the pro members, and that was on the basics of the bond market. And part 2 is going to be next Wednesday, when he goes into advanced conversation on the bond market. So I had a lot of fun. Honestly, anytime Tyler teaches, I have a tendency to sit down and listen, because he's one of the finest educators in the world, in my opinion. And it was really good to have Tyler back. And I look forward to having Tyler do a little bit more monthly content and tackle trading as well.
Yeah, absolutely. If you haven't had a chance to catch it, check it out for sure. If you need to rewatch it, there's no shame in that. Always great to have Coach Tyler dropping a little bit of knowledge to all of us. Right, does a great job. And of course, all of our pro members have access to that. If you're not a pro member and would like to check that out, or any of the other things we're doing, including our weekly stock options, commodity report, our newsletter, our traders lounges, our coaches shows, our webinars, you know the drill. Never a better time than right now to give us a try. We have an offer of 15-day free trial. Come in, see what we're all about. You'll find that in the store tab over on tackletrading.com. See if it's a good fit for you. If it's not, no big deal. But you know what? I think you are going to find it as a good fit. I don't think you'll find a better community out there. With that said, Maddie,
love our community.
Absolutely. We have a good time. I like to think we get some good work done.
We teach people how to grow a beard like Coach Frank.
So, there's no teaching that, Maddie. That
just either happens.
that
That's
either
natural.
happens or it does. That's what happens when you're naturally hairy and don't have to shave, right? So, so I mean that's
I knew there was a reason you found trading.
so there is. I didn't like having to be clean cut and shaven on a daily basis. I needed to find
Uh-huh.
something that
Uh-huh.
so is this or lumberjack? And I, I was open to either, but excited to tell you this, Matt. Earnings season isn't done, but the big bulk of
But
earnings season is
yeah,
behind us.
yeah.
We're getting into what I, affectionately call the straggler season, right? Where there's still, you're still going to see plenty of names in the next couple of weeks, but it's nothing compared to these last 2 weeks as far as, size and way that they can move the market. That, we got Apple, right? Apple kind of finishes that one off. You know me, I'm always excited when I get through that bulk of earnings season, Maddie. I also know you couldn't catch the halftime report obviously yesterday being on the road, but Coach Mark did a fine job in earnings
I
roundup.
about
But
called in from the road. I was like, I miss it. I love the halftime report. Love hanging out every day with the crew, and I about called in just to hang out. But I
Coach
was
Mark
like,
would have been there for it.
spotty.
He was like, you know what, I really have an appreciation for the work Matt does on these earnings, as we all do, because it's a kind of a pain in the neck to dive into the numbers on all of so many names like you do. So he got a taste of your
Um,
medicine. He didn't like it. I bet he's glad that you're back to do earnings roundup.
it
And
is it's a labor of love, I would
it
say.
is. Hey, listen, I've said it before. I'll say it again. I appreciate you doing it, so I don't have to, my friend.
Well,
So keep up the
I do
good
it
work.
anyways, for a few reasons. But I do it anyways. I like to personally, I like to have an understanding of the fundamental backdrop of the actual individual companies and not just rely on my opinion on the market index or whatever geopolitical conversation we're having. Um, I also like to, I'm going into Tackle 25 and I take great pride in the Tackle 25.
As you should.
And I feel like the Tackle 25 is one of the best lists out there in the marketplace. And to really do justice on the Tackle 25, I think you got to have an understanding of the depth of the marketplace from an individual perspective as well. And then obviously, just from a personal side note, you get to find a lot of opportunities, both from an investor perspective as well as a trader's perspective in going through the conversation of earnings. And so I understand fully that earnings season can be, oh man, there's a reason we complain about it, right?
Yes.
There's a reason for that
A
because
reason?
it shuts down a lot of short-term trading based on rules around earnings. But I think it's extremely important to have an understanding of how earnings plays out in the marketplace. And so, don't get me wrong, there's stocks like that I cover on a day in day out basis in the halftime report that I would probably not cover if I didn't do it for tackle trading. But I also can't tell you how many times I've found opportunity for both myself or for coaches, for
Yeah.
our members of our community on stocks that I never would have evaluated if it wasn't for earnings roundup and the halftime report. So it's I call me crazy, but I actually love diving into the data on a day in, day out basis.
I
And
know you do. And that's why I don't do it, Matt. That's why I sit back and let you do it. And then I just reap all of the benefits, like so many of
well,
others in the community.
let's see what we can find
Let's see what we
today
got today.
in
I'm excited
earnings
about it.
roundup.
I mean, obviously it's Apple Day, so we're not going to bury the lead here, right?
No, it's Apple, 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 Apple. It's the behemoth of Apple. In general, my general takeaway from Apple was very similar to my takeaway from a lot of the Mag 7, but more on the Google side of Mag 7 was good report. But if Apple's at the top like Google was, probably sells off a little bit more aggressively here, Frankie. Apple coming from a lower point, good week to report earnings, good day to report earnings, probably got a little bit of love there. If Apple reports during Google week, same time frame, probably looks a little bit more like Google. So timing plays a role in this conversation on earnings. But from a raw numbers perspective, just if it wasn't Apple, like these are decent numbers. 146 against 139, that's a beat on EPS. Revenue came in at 89 versus 84 billion. That's a beat on the revenue side of the equation. Revenue went up, but not aggressively year over year, but it did go up. They also reaffirmed forward-looking guidance, Frankie. the problem for Apple in the report was they were expecting a little bit of drop versus expectation for the fourth quarter going into the holiday sale season, which is obviously a very important season for a discretionary company like Apple,
Yes.
that just released a lot of new products as well. But for the most part, I took Apple's report as a pretty decent report here. Beats on EPS, beats on revenue. You look at the guidance, guidance was reaffirmed, Frankie. And so officially guidance was reaffirmed. There's just context to what we all complain about. And one of the things Wall Street's complaining about today on Apple is a little bit of lack of for the fourth quarter holiday sale season. But officially guidance was reaffirmed. Apple here, I got a question for you, Frankie, technically. Day one caught 9, baby.
Yeah, that's
I
impressive.
can't not see that. And so did we catch the 9 on Apple? And is Apple, and you know the technical environment, you've done detailed scanning here today. I haven't done all of my scanning here today, but in terms of the environment, couple day cleanup here, maybe a hat above yesterday's high. What's your thoughts?
Yes. I am firmly of the school of thought that you get over Thursday's high, that high from yesterday, and this is a go for me. I like the response. I
see it
like
as
that it's caught the
I agree,
9.
by the way.
It's, there's, me, I'm I like my trend lines, and getting through that high from yesterday would kind of take out that downward sloping trend line, getting us into some weird looking, probably not officially an alligator mouth, but alligator mouth.
Look at that trend line there, Frankie.
Yeah.
I mean, it just lines up so well there on that flag.
Yeah, it really, really does. And so
The
this
weekly
is,
flag, mind you, not the
yes,
daily
the
bearish
weekly.
downtrend.
This is definitely on my personal watch list, watching for a break over that high from yesterday. And basically, there's a lot of room. I mean, there's levels, right? We're gonna have to deal with some levels of resistance,
Yeah, of
but
course.
there's also a quarter before earnings, right? You've got a pretty good window to that first pivot at 182, 183. So even if that's all that it had, that'd be a break from approximately 178 to approximately 182. That's not terrible for Apple. The next level, opens up even more into the 190. And so, and then that one opens up. And so it's one of those probably isn't a straight shot up there, right? There might be multiple trades.
No, there's chop. There's chop there.
That happens. But I think it's an intriguing, even if you don't like the breakout, like maybe I do, I think if it breaks, it's on the watch list for pattern development for things that you do like, because that is a compelling little situation.
That weekly flag is really, really compelling. And you're starting to work off the low. The 50 weekly held to pristine environment. Like first test looks really, really good from last week. I like it above Thursday's high, and I would love a couple days of consolidation here. But again, I think if you go above Thursday high, you have a multiple time frame conversation there because of the weekly flag lining up with the daily break. A couple more days of consolidation would align that a little bit more in my estimation and get you out of the bar by bar on a day in, day out basis that I don't love. Give us a little bit of a high base type fill going into that breakout would be really, really good. But let me ask you a question, secondary question on Apple here. You got Microsoft, right? Just kind of looking at some of the components, the Mag 7 components post earnings. You got Microsoft here, right? That's a trade above the high. You're running really close into 360, which is a really important target, but that is technically a technical ad. Let's look at Amazon here. Amazon kind of fighting up to the high prices here,
Frankie. To the top,
high base here would be beautiful on Amazon. Amazon, by the way, lots of credit to Amazon. A lot of credit to Amazon in this earnings season. Before Amazon reported, I was like, these are good reports, but the market's in no favor. And for the first 3 weeks of earnings season, Frankie, it's like, if you beat, you're down 1%. If you miss, you're down 4% type environment, right? That's how negative it wasn't earnings misses. It was basically nobody was in the mood for earnings conversation. It was Amazon that bucked that trend, quite frankly, and a little bit of AMD later on. but it was Amazon to really be the first to buck that trend, to be able to carry a bit. Remember, Microsoft broke up on their earnings report, came right back down. So they were the first one to really carry that. I think Amazon deserves a heck of a lot of credit here. And so you got Amazon now back up into 140, a little bit of a high base there type feel. Google obviously needs a little bit of work off the breakdown here. Meta here looking pretty decent at the top, probably needs a little bit of work. There's a lot of work that needs to be put in on some of these stocks, Frankie. But when I'm looking at, say, Apple here, I don't think there needs to be a lot of work here on Apple.
No,
I think you go above Thursday high, you're good.
I think yep, I do too. And then I think you get even more froggy, above that pivot, above that 182, which is where that 20 weekly is, right? So it's one of those that the rest of these charts are more overall impressive, but not things like entry wise.
Not entry wise,
probably not things I'm looking at, in the immediate future.
Yeah.
Apple definitely does not fit that bill.
I just think that weekly, this trend line is just a very compelling trend line on both the daily and the weekly time frame.
Absolutely.
Very, very compelling. All right, let's move on a little bit here, Frankie, and let's talk a little bit about DKNG. DraftKings here, Frankie, and they are just powering through any overhead here, Frank.
Yeah, they are.
Simply here, slight beats. Came in at a negative 61 cents. Expectation was negative 69. Revenue, real decent beat, 789 million versus the 686 expectation. Revenue went up 57% year over year. This is a guidance conversation, and this is a daily active users conversation at DraftKings. Slight increase in revenue guidance for both the fourth quarter and for 2024 in general. So we're dealing with a slight increase in guidance, number one. We're also dealing with unique monthly users that are actual payers, Frankie, people that are actually gambling, right, on the app, up 40% year over year as well. That's an impressive number for DraftKings. The investors came out and partied here today. DraftKings is celebrating a positive earnings report. Frankie, we're talking about a breakout coming from the low point. High base and go, baby. That's all I'm going to say. Or flag and go. Inside candle analysis. What about you?
Yep. The next pattern I'll be very interested in, whether it's a high base or it is, because you get through this level. I mean, you are into a pretty good sized window. So definitely very good watch list for post-secondary pattern for me. I mean, that's pretty impressive.
Yeah, I like that technical conversation on the backs of an increasing a revenue expectation and guidance for 2024 as well. Good conversation, good technicals on DraftKings. Keep an eye on whatever. And honestly, flag could be front run. A high base could just be a technical ad. Both look pretty decent. Yeah. Frankie, I'm not going to go through the raw numbers here, but two companies that did report here, one a utility company, one an energy company. Just a little bit of coming off the low here, Frankie, and Dominion here. Weekly chart coming off the low a little bit, testing that 9 EMA. So just a couple technical ones coming from the low that caught my eye. First one was Dominion. Keep an eye on that. The second one was ENB here, Frankie, energy company here. Nice little W formation. Now you're breaking up above that W formation. Once again, post-earnings conversation. That looks like a very improving environment there on ENB. So didn't want to go through their earnings conversation, but again, they did have beats, but in general, I liked the technical conversation more than the earnings on both Dominion and ENB. Let's move on. Let's talk a little bit about Block. Frankie, the only reason I didn't call it Square is because Square was part of the earnings conversation. And so I got a little bit of reminder this morning right before the halftime report. But Square came in at slight beats, guys. Revenue went up 24% year over year. And the Cash App and Square both had increasing revenues in their guidance as well. And so both of them were positive tailwinds for Block here. Frankie, you're coming from the low point on old Square. See, I just did it. You're coming from the low point here, Frankie. Question, any interest on any reversal here, or do you think it just got a lot of competition?
I think it's got a lot of competition, but I could have interest. Just depends on, I don't have interest today.
I don't either today.
and I don't have enough interest to be like DraftKings, I'm going to try to catch whatever next, right? Maybe I can, maybe I can't, maybe it works, maybe it doesn't. Square is one of those. You consolidate here for a week and kind of look like, like RTX did, consolidation above the 50 while the 9 catches up, give me a real clean high base. I could be very interested if I were to see something along those lines. But yeah, I mean, you got to be impressed. I mean, Square's been terrible for a long time. And so, but most things don't stay terrible forever. And you got to start somewhere, and maybe you hold this bid and you clean up, you get that first pattern that leads to a second. I mean, it wasn't that terribly long ago that these guys were, $200 plus, right, Maddie? So I'm not ready to call it a bottom, but sure, I'm going to be interested if the right pattern develops.
Well, I just think RTX is a really, really good call out here, Frankie, both for the price action following earnings, obviously different companies, but price action following earnings,
technicals, yeah,
and choppy price action in front of earnings. RTX had a lot of chop in front of earnings. Post earnings got cleaned up in a high base. That was one of my favorite picks of the week last week.
Yeah.
So square here, block, high base. You kind of have a little bit of a porch here that you can anchor up against. Also right here about 53, 55, anything in that range. So let's see if we can get a high base on that. But I think it's a high base or nothing here on Square for me.
I agree.
Let's move on. Let's talk about Cardinal Health here, Frankie. I know you love your healthcare every now and then, especially the plans.
Yeah.
Cardinal Health here comes out today, and they are just this is a good beat here. 13% beat on EPS. They were in line on revenue. Revenue went up 10% year over year. Frankie, multiple time frame breakout. Train left the station. You gapped up above the breakout channel 95. You scream above 100. You're currently at right around 102. You look on the weekly time frame. This thing left the station, obviously. But is this one that you would put on a watch list for secondary pattern watch?
Yes, absolutely. You just broke everything, right? And so obviously a candle like this is just not something that I'm ever going to be chasing for better or worse, but
especially in healthcare.
Broke out of all-time high. I would think some sort of a flag would play here, any sort of consolidation. I mean, obviously look at this chart. This candle is much different than pretty much any candle that you can see on your chart there, right? A little bit out of character. That's what earnings can do for you. So I don't think it's a momentum type situation, although hope it is for anybody who is an investor and enjoying being in it right now.
Investors are popping champagne.
Secondary pattern, absolutely. Anytime something breaks out, I mean, even a pullback into say that 95 zone, I mean, you want it to be somewhat orderly, right? If that were to happen. But yeah, I mean, how do you not want something that just hit its all-time high on a watch list for the next pattern? I'll always say yes to that.
Why would you not put a stock that just broke out of a clean multiple time frame situation that is now at an all-time high on a watch list for a secondary? There is not an answer that ends in no.
I can't come up with one.
No,
you hate
it's
Cardinal
a good
Health,
way to think about it, Mickey. That is a good way to think about it. Let's see what about Coinbase here today. Bitcoin came out of a clean high base, got a little chop right now. BITO hanging out right underneath that 18. Coinbase tempting a little bit above 90 here, Frankie. Coinbase comes in at negative 0.1. It's not necessarily a negative given the fact that the expectation was a negative 54 there, Frankie. Yeah. So a really, really good beat on EPS. Revenue also topped 674 against 652. Revenue went up 14% year over year. Technically, question. Coinbase above 90 falling a high base or BITO above 18?
Ooh, I think I still have to go with BITO.
I think
I have to go with BITO over that. And part of it is, a preference thing. Coin is one of those high volatile options that I kind of like for credit spreads to kind of bet on things holding. So I don't really tend to directionally play coin. And so I know I'm kind of speaking a little bit of bias because that break is solid, especially if you get some consolidation leading into it. maybe even cleaner than BitTO's break. But I still think I prefer BitTO to kind of just, well, my thoughts are, if Bitcoin's got a run on it, well, I'm pretty confident that BitTO will go with it. And coin, weird stuff can happen with coin because it's still a stock, right?
Coin, I just priced out a 42-day bull put spread on coin, 80 cents, $5 margin, 80 cents. So you get about 20% return, 17 delta. That puts your ROID at about 103, which would put it into the upper echelon of ROID.
Yeah.
That's good credit.
This is a
That's a
good
good
credit
credit.
stock. Yeah, this
And
is a good credit.
you can't do that on BitTO, obviously.
No.
So if you're looking credit, Coinbase looks pretty decent on it,
Agreed.
honestly, on a credit spread. BitTO, I like BitTO above 18.
Yeah, I think that's a good way to look at it. If I want to, go the credit route, I'm coin. If I want to go the directional route, which is kind of where my head is, I'm going to lean to the BitTO side.
Yeah, that's where I'm at as well. Frank, that's it for earnings roundup here today. There was a lot of earnings.
Yeah, there were.
I'm sure in the Trading Justice podcast this week. Man, oh man, Chucky and I are going to have a deep, detailed conversation.
Oh yeah, it's going to be a good one.
We got lots to talk about after a week where I just felt Powell was different. I did. I felt his tone was different. I think I felt he was having a very serious adult conversation with the market on Wednesday, in my estimation. So it's about stinking time because it's been a while. But earnings, going to do a full earnings update during the podcast because I think this is turning into an earnings conversation. If the fourth quarter rally does occur, 5 years from now, we'll look back and be like, hey, did you see that seasonality? But in the moment, it was an earnings conversation that propelled it. So that, and obviously a Powell pivot, my tackle trading fantasy football name, Powell's pivots. Well, we saw that this week.
So we absolutely did. Well, appreciate the earnings roundup. I know you're on the road, so Maddie, for Frank Sharp today, I'm just going to rapid fire a few things.
Just let's put three quick ones on the radar, then let's get out of here.
All right, sounds like a plan. First up, then I'm going to give you CAG, Congra Brands, bear stop out at the 50-day moving average. Look at that lining up with that 9 weekly. You're seeing this to a lot of extent in both staples and utilities, right? So you got bear stop out type analysis, a little bit of a window to work with. There are options in the space, but I think this for a new trade is one of the cleaner setups out there.
I think you could be looking position or swing here, Frankie. I first of all, I like Staples. Staples has been doing absolutely nothing wrong. Staples looks really good in reversal analysis at this point.
Yes.
Staples has some work to do. It's got a lot of junk on top. And so next week, I wouldn't be surprised to see a little bit of consolidation. Let's dial in this 50-period moving average test that coincides with the 200 weekly. So Staples is an improving conversation. This is a beautiful short-term reversal. It's just a beautiful short-term reversal. It's very clean above 28. You got the 50 daily at 28. Your pivots are at 28. You come out to the weekly chart, and guess where that 90 EMA is, Frankie? I think you pay the 9 cents and you say 28.09, but it's clean. It's really clean above 28.
And we'll see you at 30, right? We'll see you at 30
that's kind of the philosophy on Conagra.
Yeah. I'm with you. All right, I'm going to give you one more
like that
bull
one.
here.
That one passes
that one passes. All right, I like it. All right, I'm going to give you one more bull here. WR Berkeley. A little bit of a after earnings, got to pull back, consolidating at the top of the earnings gap here. It's a little bit wicky, but that is partially because of the digesting that earnings. It cleans up a little bit of wiki nonsense, Maddie. Breaking out, and you'll notice all the while this 9's been creeping up and holding any test. That quick snapback, gobbled right back up, right into that resistance. I like this one. I think it's pretty clean up here. There's a few in insurance that are intriguing, but I think for just a good old-fashioned swing trade or 1 week type trade, I feel like this one is one of the cleaner ones out there. You got a pretty clear path to $72 or so on a little bit of a high base post earnings. I thought this one was intriguing in that space.
Yeah, it's intriguing in the sense that you got a clean trigger above the wicks, right?
Yes,
There's wick nonsense, but you'd have to get above the
you have to
wicks. You would
clean them
ride the
up.
9
Yep.
EMA. I like the Conagra one better
Yeah, I
personally.
figured you would. I
I
figured
do.
you
I
would.
like the low prices better coming from the low point. I think it's cleaner, and I think if it works out, it's got a bigger return potential on two very conservative names
Yeah.
traditionally. And so I would say, yeah, you do got some cleanliness up until about 72. 70 might play a role, but it's really a 72 type conversation. You could certainly see the momentum right up into there. I would see that as a swing trade. I don't see anything else here other than a short-term trade. Whereas on Conagra, I think you got a little bit of a multiple time frame situation. And typically, if I got a multiple time frame situation where I could swing to position, that fits my general philosophy a little bit more than just the pure swing out of an insurance company.
Yeah, that's fair. That's fair. All right, I'm going to take jump off the bull side and give you two quick bears to look at. And then we're going to call it,
Yeah.
Maddie.
Love it.
First up, UPS got a bearish retracement. Pretty there's a fair amount of bearish retracements out there still, and there's an awful lot of needed dojis.
A
So
lot of needed OGs.
a lot of needed dojis. This one, I would say you do need some downward movement for confirmation. I don't think, I wouldn't feel comfortable going in under today's low, but I do think you got a pretty intriguing trend. The depth doesn't concern me like it does in a lot of other areas
It's
in the
not deep.
market.
You're still fighting the
You know,
9
you're
EMA.
still finding that 9 territory. Want to see that intraday trend that's been so strong to the upside get taken out. But I thought
Yeah.
you could do worse for a bearish retracement. And then if you're looking at a reversal, Maddie, towards
Bear call spread. Excuse me, bear put spread. I like vertical here. Bear put on UPS.
yeah, I agree.
With simple confirmation. If you're
Yeah,
going to go
just
straight directional, I think you got to be a little bit more detailed on the intraday analysis. But a bull put spread, you can be a little bit more of the, I'm trying to reduce my military analogies and I'm having a hard time because I used to describe. I could go on this conversation a million times, but simple reality, I like the zone defense a little bit more than the man-to-man on UPS, and that would fit more of a vertical spread than a directional trade. Even
yeah,
though a vertical spread is a directional trade, a bear put spread
it
is a
gives you a little
directional trade. It's
more.
just
Yeah,
fixed risk.
you got a little more
But
wiggle room. Yeah,
when you do fixed risk like that, you also don't got to be pristine on your entry versus stop loss conversation either. You're more about playing zone defense than anything there.
yeah,
But I like the technical edge here. Market not only had a deep bearish retracement, I don't even think you can call that a bearish retracement any longer
no,
in the market. I think you got to call it V-shaped recovery.
yeah, I would agree.
Here in a V-shaped recovery in the market, obviously when the market does that, it's going to raise all the ships, right? UPS is going to be raised. Everything comes in, but does it change the conversation? And on UPS, it doesn't. You still see it as a bearish trend. You still see it as a bearish retracement, and you still see confirmation underneath the 9 EMA. I just like fixed risk, more conservative option strategies there.
I think that's a fair way, and that's where my head would be as well, going bear put route with this.
Bear calls
Bonus,
you can't. You got to go bear put.
yeah, and I think you want to on the retracement, but maybe that's just me. All right, bonus, Maddie, CME, just a little bit of a different look, reversal, really terrible situation. This one's really nice on lots of time frames, giving up the 50, giving up the 9, assuming it closes. And if you look at this on an intraday, Maddie, so you're going to be getting into pockets, right? Getting in that pocket. If you look at this on your intraday, you will see something pretty darn clean, a really clean low.
Very clean.
Is forming. Follow through would be the confirmation of the break of 50, the break of the 9 weekly, a little bit of room
news?
to go.
There had to be news today.
That was, I don't know what their news specifically today was, but I know that
when markets when markets in general go up, right? Especially as aggressive as they did, and you don't have any blue icon here, and and this is down 2.5%, the market's up 1% type thing.
yeah.
Usually there's that ultimate question on what did they say here
and
today?
like nothing like jump. Yeah, what happened? Because there's like, I didn't see any big news story, so it's not like it was a big news story.
No,
I
I know.
didn't see me, so it's
didn't
not
see news.
the biggest name, but a pretty ugly look, and that would be lower highs, lower lows, break of the 9 weekly, break of the 50, just a lot of things that would concern
Um,
me.
Yeah, I could definitely see a short-term trade here. I think you have to target 200, and I think there's going to be a little competition for some good good bearish setups in the scatter reports. I think you got to be ready to rock and roll with a couple bears next week. I do.
Absolutely.
I think we're turning into a bullish conversation, but we're also
Just like
V-shaped
you needed to
recovery
be
back
ready
up
to
into
rock
the
and roll with a
overhead.
couple of bulls this week, right? Because
Well,
you, you never know.
exactly. And so I think you got to be ready with a little bit of bears next week, just in case this pivot fell, or not fells, but holds, and you
Yeah,
see a little
a
bit of
little bit
retreat
of
back down, or even if you just see a little bit of a, like what I would consider at this point a bullish flag. I would consider this a bull flag if we go down 2 days here, especially if we come into the rising nine.
yeah.
And so you got to be a little bit prepared for that. And so I think there is going to be a little bit of competition for the bears. I think you got to be a very aggressive on CME. I don't think you have to be very aggressive on UPS. I would prefer the UPS route over the CME, just because of how ultra aggressive you have to be on the triggering.
Yeah, I think that's fair. And you're right. You're going to have some good setups on both
It's a
sides. I'd
good
say
setup though on CME.
in large part, there's going to need to be some development. That's not going to come
Yeah.
as, a dramatic surprise to anybody here. Need to digest this move, but there is always something out there, and we're going to get to it now, Maddie, in our scouting reports, making sure our team is ready to rock and roll no matter what the market throws at us next week, ready to rock and roll, whether we're trading stock, options, commodities, just talking about the market as a whole. So we're going to get out of here, get into that scouting report meeting. But as always, team, thank you so much for hanging out with us. You know how much we love and appreciate you. Be on the lookout for those reports this week. If you're, are not a member of Team Tackle and are interested in joining, again, never a better time than Friday going into the scouting reports. You can find all the information over at tackletrading.com, or you can always send us an email to team@tackletrading.com as well. Maddie, final thoughts, and then we'll get out of here for the day, my friend.
Yeah, good, real good recover from the bulls this week. Just what the doctor ordered. You got to pivot on some hypothetical economy contracting next year. Then you get an economic report that kind of fits the bill. Just a little bit of a perfect situation for the bulls. They heard exactly what they wanted to hear in both the labor market numbers and the central bank this week. I think we're obviously, this is a macro environment, but as we move on a little bit further, it's becoming an individual stock conversation. I'm looking forward to the conversation in sectors this week. What sectors are really setting up? What sectors get those big upgrades? What sectors are on the right side of 50? What sectors are on the left side of 50? I think you're going to see a reset out of the sector conversation this week at Tackle Trading. And that's what happens when you go from bear down trends to a massively deep retracement to now a conversation on back onto the bull side. You're going to see 10, 15 point upgrades in the sectors, but which sectors are right side of 50 will be very telling, given the fact that most sectors are left side of 50. And the only way we're going to put right side of 50 is if we see some bullish patterns along with bullish trends, the developing of them. So I'm looking forward to the newsletter this week. Hope our pro members enjoy the newsletter this week. I'm looking forward to the rankings. I'm looking forward to the scouting report. So we're going to go get hard at it. We're going to go put together our newsletter, our rankings. We're going to put together our options report, our stock report. And if you're a pro member, that's the weekend routine at Tackle Trading. It's the reports, it's the stock, the options, the commodity report, the Tackle Trading newsletter. It's getting a lay of the land and making sure that you know what you're going to be doing coming in on Monday. If you're not a member of Tackle Trading and you want to be a member of that community that helps each other navigate the financial world, that has a healthy dose of education behind it and emphasizes education over application, but helps you on the application side as well, check out Tackle Trading. We love our community, and so will you. You can get a 15-day free trial on us at the Tackle Trading website.
Absolutely. Well, Maddie, always a pleasure, my friend. Team, as always, you need anything, you know where to find us. Hit us up on Discord, send us an email. Other than that, have a great weekend. We'll see you Monday.